What's up, guys? It's me here. So it's official. As of today, you are officially 9 days away from being a millionaire. Well, at least financially, because you have stumbled upon what is arguably the best beginner-esque guide to investing that will quite literally set you up for success for the rest of your life. So, if you're someone who's been struggling with which accounts to use, where to open, how to invest, when to invest, or even just trying to figure out if you should invest in the stock market at all, then this video is going to be extremely helpful because I am gonna answer every single question for you. That's why before we begin, I'll quickly ask you to do 2 things. First, drop a like on the video if you appreciate all the research that goes into making a video like this. And second, make sure you subscribe if you haven't done that already, because it does help me out tremendously. All right, now that you've done that, let's begin. Now, before you invest a single dollar, I think it is important to first understand what investing actually is and why so many people do it. See, without a doubt, one of the most underrated benefits of investing is that it allows your money to work for you while you work for it. Just think about it. If you had $10,000 sitting in your bank account earning 0.01% interest, that would mean that after 30 years, you'd end up with an extra $30 on your bank account that you could call interest income. However, if instead you invested that same $10,000 into the S&P 500, which has historically returned around 8% by the time you're 65 years old, your initial investment would have grown to nearly $1 million. That's why even though saving is good, investing is better, because instead of saving your money, you can put it to work and have your money earn money while you continue to work your job. This leads us to what types of investments exist and which one should you choose. Now, in general, there's 2 categories that all investments fall into: risk and return. Simply put, the higher the potential return, the more risk it usually is. Think of it like this. If you wanted to drive from New York to Los Angeles as fast as possible, you could rent a Ferrari. It'll get you there quicker than anything else. But if you wanted something safer and more predictable, you would choose to drive a Toyota Corolla. Even though both vehicles can get you from point A to point B, one is more likely to get there faster and with less of a chance of an accident. The same exact concept applies to investing. And I think it's important that you understand the full scope of your options. The first type of investment that I always recommend everyone start with is real estate. Real estate is great because it's relatively easy to understand. You see, when you buy a property, you either purchase it as a primary residence to live in yourself, something called a short-term rental, or as a long-term rental property. Most investors tend to focus on the long-term strategy because of its cash flow and passive income potential. For example, let's say you buy a $200,000 home that rents for $1,500 a month. With a 20% down payment of $40,000, you're left with $160,000 that you finance over 30 years at a 7% interest rate. This means that your monthly mortgage payment would be $1,120 a month, which means after accounting for the rental income, you'd be left with $380 a month in profit. Over time, you'll eventually pay off your loan completely, and at that point, all $1,500 a month will go straight to your pocket. It is also worth mentioning that real estate tends to increase in value the longer you hold onto it, which makes it a rather safe investment. Although keep in mind, with any real estate deal, there is going to be some level of maintenance, repair, and vacancy issues that could impact your bottom line. That is why if you don't want to deal with tenants, or if you want something a little bit more hands-off, there are other options that I'll talk about shortly. But for now, the next type of investment that I'll mention is called peer-to-peer lending. In a recent study, Lending Club found that the average savings account pays less than 1% interest on your money, while the national debt is growing at 4.8%. So that means that essentially the government is paying almost 5 times more interest on your borrowed money than you would ever earn by having that money sitting idle in a bank account. To take advantage of this arbitrage, you can consider peer-to-peer lending platforms like Lending Club and Prosper, which allows you to loan money to other individuals or businesses at a fixed interest rate. For example, if you were to lend $20,000 to another user at a 7% interest rate, you would earn $1 per hundred a year in interest, which means your money is making you twice as much as it otherwise would have in a savings account. Keep in mind, although this is a pretty good way to earn a risk-free return above 5%, there is still a slight chance that the borrower doesn't pay you back. So make sure that you diversify across many different users to limit your risk. Now, speaking of risk, another great way to offset your investments is to consider Treasury inflation-protected securities. These are basically loans that you make to the U.S. government that protect you against inflation. In exchange, they pay you back a fixed amount of interest depending on the length of time that you lend the money for and the current state of inflation. For example, right now you could lend the government $20,000 for 10 years and earn 4.81% depending on when you decide to lock in your rate. Not only does this offer a guaranteed return that's not tied to the stock market, but it's also backed by the full faith of the United States government, making it one of the safest places to store your money. Though personally, I believe there's a better option that we'll talk about shortly. Before we go into that, though, it's important to mention the most common type of investment that most people hear about, and that would be stocks. Stocks represent a small ownership share in a company. And the more you buy, the more you own. For instance, if you bought one share of Apple stock at $150 per share, that means that you own 0.001% of the entire company. Although if you held on for the last decade, you would be up several thousand% from the current price. Of course, that does not come without risk, because there are plenty of stocks that have gone bankrupt and ultimately resulted in an investment loss. That is why I think it is important to remember that the more volatile and high risk an investment is, the higher the reward tends to be. So if you're looking to lower your risk, it might be worth considering something a little bit more stable. Like gold. Gold is considered a safe haven asset, meaning that it generally performs well during uncertain economic conditions. And over the last decade, gold has risen nearly 50%. On top of that, unlike stocks, gold does not pay a dividend, but it does have the benefit of increasing in value without needing a catalyst, like more sales or more profits. However, that doesn't necessarily mean that you need to go out and invest in gold bars or nuggets. Instead, you could simply invest in gold through the GDX fund, which is a type of investment called an ETF, or exchange traded fund. ETFs are baskets of securities that allow you to invest in a wide range of assets under one single ticker symbol. For instance, the SPY ETF gives you exposure to the entire S&P 500 index. So when you buy one share of SPY, you essentially own a small piece of 500 different companies. This means that your risk is offset by the entire portfolio, and if one company goes down, it's unlikely to have a major impact on the overall fund. SPY has consistently outperformed 98% of funds over the last 15 years. So, if you're looking to easily invest in a low-cost diversified portfolio, this is probably your best bet. But despite how popular investing is, there is still a reason why 69% of Americans aren't investing their money, and that would be cryptocurrency. I know you didn't think I was actually gonna say that crypto is a bad investment, but hear me out. While Bitcoin has shown promise as an uncorrelated asset that's gaining popularity, it has also lost 73% from its all-time high, and it is really not until the volatility dies down that we can determine whether or not it is truly a viable long-term investment. And that brings us to what I believe is the most profitable investment of all time, and that would be yourself. See, the truth is that your ability to make money is directly tied to how much you value your time. There's a saying that goes, "You can't make more time, but you can make better use of time." And that's never been more true than it is today. Just think about it. What's the point of investing in stocks, real estate, or gold if you don't know how to manage your money? In order to properly build wealth, you need to spend less than you earn, save as much as you can, and invest over a long enough period of time to ride out the ups and downs of the market. Although, honestly, no matter what you invest in, as long as you're getting started, that's what's going to lead you to success. Because statistically, the earlier you start, the better your results are going to be. Take a look at this. Researchers at Fidelity Investments analyzed over 12 million accounts and found that the average annual return for someone who began investing at age 20 was 8.4% versus 6.6% for someone who waited until they were 60. Personally, I'm using a robo-investing app because they have the lowest fees in the industry, a completely hands-off investing experience, and the best part is that they allow you to invest in a diversified portfolio of ETFs for free. Plus, since they're regulated by the SEC and protected by $1.5 trillion in FDIC insurance, you can rest assured knowing that your money is completely safe. Oh, And not to mention that they're offering to free stocks valued between $3 and $300 when you sign up. So, with that said, you guys, thank you so much for watching. Also, make sure to add me on social media and to my second channel. Enjoy! Thank you so much, and until next time.